Hello and welcome to Price Action Analysis with me, Jan Muta, Chief Market Analyst for TO Markets. And today we're going to take a look at gold again. Yesterday we focused on the short side, looking for sell signals in the zone that I gave you. But now because of weakness, USD weakness, coming into markets, I can see it in today's price action in several assets, several different assets. And this is why we are looking at gold possibly moving higher. And in this analysis, I'm going to give you some ideas what to look for, what makes sense in this price action, what to pay attention to. So before we do that, let me remind you that you can have more analysis in tomarkets.com/analysis. And we've had quite a few successes lately, so you might want to follow us there as well. So I'm sure it develops you as a trader. But please do remember, we do not provide investment advice, and you should only proceed watching this video if you agree that all the material is made available for educational purposes, marketing purposes, etc., and does not constitute as investment advice. You should pause the video, read through the disclaimer, and only proceed if you agree with it. Okay, and here we have gold chart in 4-hour time frame. I just want to quickly recap what we covered yesterday. The market was trading, the gold price was trading below this resistance marked at with a black line here at 1862.36, and I was saying that if the market rallies back to the level as it did, then we should look for sell signals, because when the market is trending lower, there are rallies, and the rallies should be sold until there is some evidence to do something else. And now there is some widespread dollar weakness. Whether you look at Euro USD, New Zealand USD, USD Yen, USD CAD, you can see that the dollar is attempting, that the markets are attempting to turn, and dollar is getting weaker. So let's look at gold and and try to say and understand what this means about the market. So basically, we have a higher low here. No, but before going there, we have market fighting a resistance. So we have the channel high and we have the recent high from yesterday's trading, and the market is trying to push through that level. Whether it goes or doesn't, we don't know, but we can say that we believe there is a good chance of this happening. Obviously, we don't promise you it will happen because we don't know, but we are thinking there's a good chance market might push higher. Now, what are the reasons for this? Obviously, if we look at what's been going on here, the market created a higher low. So this combined with the fact that there is this dollar weakness that we can see in different assets, we believe there's a chance that we push above 1876.75. So let's see how market might move if this happens. So we can use the recent range that we have here. The market bounced from 1847.90 to 1876.75, and this width gives us an idea on how far the market might move next. And if we look at the potential move higher, there it is. The green box highlights the area where I believe there is several things coming together, because we always try to find technical confluence areas. Why is obviously the question. The answer is we seek for these because we believe that the markets are likely to turn around at areas where several people are looking at several different technical factors. The more technical factors that come together, the bigger the probability that more people are focusing on those levels. Then we have the Fibonacci levels. We have 38.2 at 1895.92, and that's that's the level I have marked here with the blue line. Sorry, with the black line. And then the 50% Fibonacci level at 1910 spot 75 marks the upper end of our sort of potential reversal area or a target area. There will be people who trade long from here. There will be people who just look for short trades once the market has reached this level. Obviously, different styles to make money in the markets. Now, other things that come together in this area are this low here from August 26th. And if we take a look at other potential levels, I think we have this low here. This low is definitely interesting. It is smack on with the width of the formation here. So I'm looking at this range as a loose kind of formation, and if I make a projection based on the width of this formation, we get to this low. So all these things together suggest that the green highlighted area is important, and maybe you want to pay attention to it. If the market rallies above 1876.75, it's highly likely that the market will move to that area, and there's the long trade. Obviously, if the market just keeps on trying and can't get above 1876.75, then obviously this whole setup might fall apart, and we need to then reevaluate the situation. Now, we are hearing news that there might be a vote on this $2.2 trillion package from the US next week. So if this happens next week, it is likely that the markets will move against the dollar. So this is all for me at the moment. I just wish that you will trade safe, always use the stops, and be careful. You might not want to have the weekend risk. So maybe closing positions on Friday and reopening them on Monday makes sense, because over the weekend news can happen and then the markets can gap beyond the stops. So thank you, trade safe, and see you soon in the next video.